Hello, fellow traders. 'Tis I, the Rumpled One. September the 19th. It's Wednesday, the year 2018. Let's talk trading. Bodies. Talked about wicks yesterday. He's talking about bodies, candle bodies. What's that got to do with anything? Well, we'll see, won't we? Of course, money and risk management has to do with everything. I won't repeat myself today, but you guys know why I do this. Bodies, big bodies, little bodies. See this big body here? When I see a big body, I usually believe that price is going to return to the open of the big body. See this big body here? See how price returned to the open? Now we got a kind of a big body here and kind of a big body here, and you see price pretty much return to the open. That's what I look for. Now, of course, let's look at the weekly. Okay, you see this big body here and price return to the open, and this is kind of a big body and price return to the open, and this is a big body and price return to the open. And we got this big body here and another one here. So we're looking to see price return to the open sometime in the future. And we can see here the pound dollar still hasn't filled the gap. But that's what we look for. And the wick zone, you can see here, we're just 3 pips below the top here, previous month's high. See, we already broke through by about, 60 pips almost through that high, because we're 61 off the high. So it's about 58 pips, looks like. And you see here we broke through the previous week's high right there. Now we're still in the wick zone. And then on the daily, we broke through that wick zone. So, and then you can see here, there's a big body, and there's a big body, and you can see how price has returned to the open. You see this big body here? So, looking for price to return to 129.32. Maybe it does, maybe it doesn't. And looking at the range, 1, 2, 3, 4, 5, 6, 7, over 100. Euro yen respectable 90, but dollar yen only 28. Once again showing when you use your frequency distributions, you can see when things start to change, and you might want to change the pair or pairs that you're trading. So just keep that in mind. And looking at the buy zone, once again, we're at the hourly. You see this big body here? What happened? Price returned to the open, but we've got a big body here, so we might see if price will return. We just have to wait and see. And you see the pivot point was right within the short zone, so it really wasn't much of a pivot trade, but once again, candle color right here in the buy zone. Once again, this was the clue. Take that small profit. Here we go, exit, and once again, there's the clue. Take the small profit or scratch the trade. Here we go again. We can, if you were lucky enough to get in and ride right here, went in there, it failed. If you hung in there, right here, you see it scraped that wick. So it's just basically time to take your money off the table. If you hadn't taken it off at this level. And you can see here there was a short, there was a long trigger, not much right there. There's a short trigger, not much. Those almost look like, these just look like scratch trades. This one here, it was right at that line. When it came back to this level, you should have just taken the money off the table. I mean, once again, if you just look at these, it gives you a clue. As far as bodies, this was kind of a nice big body. You see here, price came back and returned through that big body. And even if you look at the 15-minute chart, you can see there was kind of a big body here. There's a big body there. Price returned to that open, right? There's another big body. Now there's some that haven't returned, but you know, maybe sometime in the future they will. And you can see there was definitely some nice rat trades here. A red rat, a couple of green rats to put some pips in your pocket. And so like if you were in this trade long here, you see here, you look to the left and you can see it starts going through these two wick zones and comes out. You know, you can actually just say, well, this is the wick zone, you know, right here, this area. And so it didn't break out, so it comes back and comes out the other way, breaks down through. Just take your money off the table. Sometimes, you know, price could have turned and went up, but hey, that would be hindsight. When you're in the trade, you know, well, you're only giving up a few pips here. So just take the money off the table. It's not that difficult. Once again, there wasn't much of a pivot. We went through it, we closed it, or covered it. Right there you can see, covered that pivot. Look at the daily pivot here. You can see we still have a couple of recent uncovered pivots and a couple of month-old pivots. And once again, looking at the price action using the 3-level ZZ. Okay, I will remember to show the indicators here that I use on this particular template. You know, you guys, if you're watching the video, you can always hit pause and look at those. So you see here, right here, one ball at the top, red at the line. Take your short. One ball at the bottom, green at the line. You take your long. 3 ball at the top, you know, red at the line. You go short. 2 ball at the bottom, green at the line. You go long. Now, if you're in this trade and it's going this way, see, there's the open. Right here, say, well, why didn't you go long here? Well, you know what? Candle's red. That's why. We're just gonna follow the simple rules. We're not gonna try to have exceptions. Because if you follow the simple rules, they're gonna pay. They will pay out over the long haul. And it's pretty much that's the way it works. You know, of course, this is videos for educational purposes only. So, you know, it's one of those CFTC disclaimers or whatever, you know, that you have to put in there. But the point is, just stick with the method. Don't try to get fancy, get funny. It's plain and simple. And if you do it and you repeat it, and you're trading a pair that gives you the opportunities, and you use your money and risk management, you should be able to come out ahead when the trading's all done. And once again, here we go. Here's the day. We're looking at the previous day's 5 lines. There's the lows way down here. And you can see candle color at the line can be profitable. Wick zone, in it and out, in and out, in and out. And right now we're coming out of that upper wick zone. Holo zone, we put in the original here, low zone. We've got the highest open right here. Gave you a nice opportunity to go short. Here you had an opportunity to take it long again, and then another opportunity to take it long. All trading just the holo setup. Inventory reduction bar. Somebody said, what were the indicators? So you see here, I've got the dots on there. I've got 1, 2, 3, 4, 5, 6 versions of the inventory reduction. You see indicator tag. Each one has a separate indicator tag. So you can do that. And the reason for that is when you go out to the objects, you can see you got the 3, 4. Those are the tags Otherwise, they'd step on each other. And it's not an easy way to tell the computer that, hey, the indicator's already been loaded. So that's just a little work that you have to do so the indicators work properly. And you can see here we had a long trigger there, only good for a handful of pips. We had a short trigger here, which did not pan out. And we're right here at a short trigger on the M15 time frame. So you can take that if you want in Randy real time. Once again, we're trading the previous daily, weekly, monthly high, open, and low. And we're just taking candle color at the line, going with the cross. So somebody might say, well, what happens if, you got this, candle going up here, but what if price starts going back down? Why didn't you take that cross? Well, because the candle color says you only go long. And so once again, rather than try to, change and try to get every single profitable trade, because when the more trade you put in, the more losers you're going to put in. I mean, sure, you could say, well, let's do M5. Okay, M5 at the line. So you can see here, you're going this way, you're going that way, you're going that way. And you could be grabbing a handful of pips. There's nothing wrong with that. But you could also get cut up too. So for example, if you went long here, all of a sudden it turned and went the other way. So, but the question is, if you had gone long, was it on one of these candles or was it on this candle? So that's what we're talking about. And you can see here we've got some price action going on down at the tick level. We came through the peak of the bid right here. Ask came through, and right now you're up a couple of pips. And the Einstein line, you can see here, price has gone up for good for a couple of pips. Price just hit there, and it might be good for a couple of pips. Here we go, Randy real time. Lots of selling going on here, lots of selling. Maybe we'll just watch this for a minute or two and see what happens. We're bumping up against that double low right here. Got the bid 007, 006, and we'll see if the sellers will stay in control. There we go. Now, you see, this is kind of a big bar here. You see that big bar? See what happened? It returned. So this is kind of a big bar. So what that's telling me is that if I have any reason to exit the trade, I will exit the trade right there. See, buying, bam, out of the trade. Now, that would probably only be good for a couple of pips right now, but there you see, Randy real time, how to do it. I mean, that was simple. And in case you're wondering, those are the indicators. Basically, we're just using the spread dot and the Einstein. The template name, I just put that there. Multimeter candle color right there. TRO time. Well, normally it would be here, but since I've got the spread dots, and I'm still working on it, I need to put this code over here, or actually after that, so you can see what's going on. So that's pretty much it. So remember, big bodies, look for price to go back to the open price, because as always, it's not what you trade, it's how you trade it. So get out there and continue to drain the banks.